afternoon, everybody. Welcome to your weekend edition of the TraderMerlin Show. It is Friday, October 21st, a great options expiration day. We had a nice big rally out of it. Big Eb, thank you for the Stock Traders Almanac stats. I think what you said, 8 out of 11 days you have on options expiration have a bullish market that day. And today we had a pretty nice one. We'll talk about some of those numbers as we progress through today's show. I am going to answer just a couple questions. I didn't get too many. Just got a few questions from viewers over the last 24 hours, but I will do my best. Of course, if you guys have some, feel free to send it on in. That said, I'm going to good stuff. It's called like Wild Oak. It's a 15-year-old bourbon, which, you know what? Give it a shot. So cheers, everybody. Happy Friday. Hope you do something fun and exciting this weekend. Oh, man. Whew. All right, let me dive right into this, and we'll run through the top markets. Then I'll go into the listener questions here because I have quite a few interesting ones that have come through. All right, let's see. At this French energy company, Schlumberger killed it today. Well, you know, earnings. That's going to be part of my discussion for today. As you notice, everything is beating earnings. Not everything. I believe the statistic out there is slightly over 80% of all of the companies that have reported so far in the S&P 500 have beat earnings. That's the type of stuff you see during extremely bullish markets. I mean, I believe the historical average is somewhere in the 70s, but we have over 80%. That's remarkable to see those kind of statistics. And, you know, you look at the overall markets today, certainly was a positive up day. Here's the S&P 500 up 2.61%, even though it doesn't look like much. All right, let me get rid of some of these darn lines on the screen here. I overwhelming us with drawing, so I'll just get rid of some of that. And I'm going to keep these blue lines in here because to me that's what I think is going to happen from the pullback perspective. Now, notice this gigantic green candle we had today, almost erasing 2 days worth of losses, which for many of you is a good thing. Certainly it is for me, given my long positions and my options expiring worthless today. But that was your S&P. You know, if you look at the grand picture, it doesn't look great. It's not like I'm looking at this picture saying, wow, this is amazing for the S&P, but on the day it is, right? We still are stuck in this kind of almost a wedge formation, a symmetrical triangle here where we're making lower highs and starting to make some higher lows. We'll have to really wait and see how this ultimately pans out. Just based off what we saw today, kind of get the feeling like you're going to see some follow through next week off these earnings, and that could push us past these most recent highs on the S&P. If you look at the futures there, the high that we saw back on October 5th was 3,820, and I think we could definitely challenge that next week. We're currently at 3771, so not too far away from that peak. Now, that wasn't your best performer. The best performer today was the Dow Jones Industrial Average. Dow Futures, which if you notice on this price chart, if I was to draw a supply zone, I'm looking right, let me get it nice and mapped out for you. I'm looking right there. It's a tiny little zone, and that's really between, on the Dow, on Dow Futures, you're looking between 31,240 and 31,390. So it's a 150-point range right there, and we're very, very close to it. Currently closed at 31,178. So we're really about 70 points away from entering that overhead supply zone. Keep an eye on that one maybe for next week or on that Sunday open for that after-hour session, etc. Let me go. I usually start at the bottom, work my way up. I guess we start at the top. So that's gold metal. Silver metal is the S&P. Bronze metal going to the NASDAQ. 2.59% move to the upside, closing 11,377, but still, you're looking at a pretty strong downtrend. Now, of course, next week, if we do get some follow-through, as it looks like we might, you've got a similar picture here for the NASDAQ, which is going to put your target right around 11,611 to 11,752. So that is currently about 240 points away from current levels, which, we moved 286 points today. So that could really hit in one day if the momentum is there. But all in all, it still looks bearish on the bigger picture, very positive on the short-term picture, and of course, generally the big picture wins in those arguments in the power category. All right, let me go to the Russell 2000, 2.39%, but it just missed the podium. This is showing a lot more sideways bouncing than we are seeing with the other indexes. It's making a clear set of higher lows, but making the same highs, which actually is an ascending triangle, but we'll have to wait and see until the Russell gets up to those highs right around 1782. All right, gold and silver moved up today. That was great for me. I'm still holding a lot of silver and some gold. Gold was up to 1.53%, looking like a big engulfing pattern today. although I want follow-through. One day doesn't really make too much of a difference. I need follow-through on this one. So glad to see it, but I want to see more upside move. I mean, really, for gold to make me feel confident, I have to see it above 1740, which is the highs that we saw back. Actually, call it 1750, right? I need to really see a move. Otherwise, it looks like it's just going to keep on trending down here. So great day, but that doesn't mean that this trend is going to break. All right, crypto, given Drew's giddy crypto smirk, there was some nice moves out there in the crypto space, but nothing dramatic on the Bitcoin front. 0.68% move to the upside. 19,135 is where we're at right now. And, you know, this picture, I'm really not spending any time talking about it because it's just boring. We're seeing a compression sitting right on that 18,310 mark for Bitcoin. And if that breaks, you're going to see a pretty fast move to the south side, but it's just looking weak and boring right now. So we'll focus our attention on other things like crude oil. Crude oil, one of the weakest performers out there today, only up 0.64%. So all in all, a bullish day for my top 7 things I like to look at here on the TraderMerlin show. And then the dollar index. Why do we get such bullish moves? Well, because the dollar was tanking. And remember, we talked about it the past couple sessions on the power of currencies influencing everything. Here you have the dollar selling off, and as that happened, you see a spike as well in the 10-year. A drop slightly in the 10-year. Now, what was interesting for me on the bond market front, and again, I'm going to try to get Bill Addis on the program for you, is the 10-year was down today, which I kind of expected with that dollar drop, but also look at the 30-year. The 30-year was up 2.84%, which is good to see the long-term yield start to surge up and getting us back into a potentially normal yield curve at some point. But that is a pretty steep ascent. These last 3 trading sessions for the 30-year have been pretty incredible. We were down at around, just call it 4.025. And we hit a high intraday today of 4.382. That is almost a third of a point. That doesn't seem like a lot, but it's massive with regards to bonds. And that trend does not look like it's slowing. So good to see that happening. Good to see the 10-year slow down a little bit. It actually is a shooting star today for those of you who might want to be looking at the bond market and trade bonds tomorrow. Or not tomorrow, when they open on Sunday night or on Monday open session. This does look rather bearish out there. All right, I think that covered all the big pieces that I wanted to look at least from the market perspective. Let's see what I got here for talk. Let's talk about that, Big Eb. So, you know, one of the things, I'm going to record the Monday morning must-knows here and then really focus on a couple of different pieces. Next week, I think it's Thursday or Friday, there's a tentative meeting for the Bank of Japan to talk about their interest rates. And as you guys noted on yesterday's show, we hit that 150, which is a level it has not seen in 32 years. That means that yen is just getting absolutely crushed. If you're a tourist, now's the time to go to Japan just because your dollar buys you so much more. But look what happened out there today. All right, this was a pretty big pop that happened in the Japanese yen. Notice this monstrous red candle, right? It really erased 5 days worth of up moves in the dollar versus that yen currency pair. Now, nothing really happened. What caused this move is the bankers over there in Japan, the central bankers, have basically said, listen, we may intervene here. And the expectation has been for the past week or so that they're going to step in and intervene because they can't just keep letting their yen just depreciate like this. But what's interesting is they didn't point the finger at the fact that their rates are negative. It's one of the only ones out there that's negative right now. They didn't point the finger at really anything else. They said, we're focusing on speculators, which I thought was kind of funny. Because, yes, certainly speculators are part of the issue, but what are you going to do about speculators, right? Speculators are the same ones that took nickel up a few months back and same ones that soared lumber futures last year. Yeah, they're going to be there, but the bottom line is your action or inaction to raise your rates from negative 0.1%, that's part of the reason your yen is getting slaughtered. So you might see over the coming weeks, I think it'll probably take a week or two, but central bankers in Japan intervening and doing something to prop up their currency pair. And that's why you saw this big old pop today. That was, let me show you the 5 minute here so you can see how quick this happened. I mean, it was a pretty abrupt move where we went from 151.60 all the way down to 146. And again, I know that doesn't seem like a lot, but this is a global currency. And the yen, I mean, that's almost a 4% drop in the Japanese yen in a period of about an hour and a half. That is monstrous. That doesn't normally happen like that. Speculation and fear over that currency pair right now. So, you know, we talked about what's going to derail this Japanese yen. Well, intervention, manipulation. right? Otherwise, this thing's going to keep on going, or the dollar's going to keep going up and up and up and up and up against that yen. All right, cool. Let's dive into some other questions out here. Yeah, Drew, I think it's selling Bitcoin and Ethereum having weekly levels and sitting there for months now. Yep. Hey, Merlin, what's going on with Bitcoin today? The equities and a strong rally, but Bitcoin lately, every time equities drop, Bitcoin drops too. So I would contend that pretty much Bitcoin and the equity markets are tied in the hip. There was this belief, and I was part of this belief system, that there was a separation. Like when the equity market started to sell off, you'd see money flow into Bitcoin. Because generally when money leaves one asset class, it's going to move into another one. However, I think that when you look at the aspect of risk on versus risk off, meaning when I look at risk on, that's equities. It's also cryptocurrencies. I would say riskier on would be cryptocurrencies. So I think that they're kind of locked at the hip now. I have not looked at statistics regarding correlation, but I can probably pull that one up for you by next week. Delicious. So with regards to what's going on with it, I would argue it's actually somewhat disconnecting. And here's what I mean by that. If you look at the chart of the S&P 500, right? Here is your S&P 500 on a daily basis. Certainly you can see the weakness that started back in January and just been drifting lower and lower and lower, probably going to continue. Now keep that picture in your head. I can't do split charts because I don't pay for TradingView, just one thing I don't want to pay for. But if you look at Bitcoin's price chart, it's following the same basic thing, but it's actually made this low earlier than the S&P. And while the S&P has a slight little bounce up to it, you're not getting that bounce here in Bitcoin. Now, I believe that this has a lot to do with regulation. There's multiple bills going through right now. There's the CCCRP from the CFTC about to go through, which could totally destroy all of DeFi and cryptocurrency. There is regulations talked about stablecoins internationally. You have lawsuits against the SEC from Coinbase and from Grayscale arguing preferential treatment and not allowing Bitcoin spot ETF. So there's a lot of different legal things going on with government agencies, whether they're being sued for inaction or actually defining the rules and guidelines for cryptocurrencies. I believe that that uncertainty is causing a lot of people just to say, I'm going to stay out for right now until I get that clarity. Otherwise, I mean, this chart, unfortunately, is awful. I mean, there's only a few things out there in the crypto space that are really moving well. And even some of those have given back their recent gains. For example, if you look at something like Cosmos, Cosmos was doing great, still kind of is compared to the other markets, right? It's got this beautiful uptrend going, up over well over 100% in the past few months, but now still starting to give it back. And even some of these other layer ones, which everyone is speaking so highly of, like Avalanche and Cardano, and here's Cardano. Cardano looks just like it's getting just murdered, right? I think if you look at the chart of Bitcoin, compare that with what you see here with Cardano, notice if I showed you this chart right here, it looks almost the same as Bitcoin, doesn't it? It's just making lower lows, lower highs, and bouncing off those levels. Here's Bitcoin. They look almost identical. However, Bitcoin is holding it. Cardano broke, which just tells you that Bitcoin is a more stable investment. Anyway, we could spend more time going over some of that stuff if you guys like, but bold move in cotton, when you have the dollar moving like this, you're getting tons of swings in a lot of different asset classes. Natural gas was the big one today, in my opinion. Yeah, certainly you had a 2.2% increase in cotton today. However, that trend is still down. Again, I'm in the camp that says this is going to have an impact on inflation numbers going forward, which should be bullish for the market overall. But some of these other markets have been rallying. You see lumber has been having a nice rally for about almost a month. Natural gas, this thing's just been cratering, which, again, I still don't quite understand this. I want to make sure that I get John Rowland on the program to maybe answer some questions here as to why this is selling off so much. Given what's going on over in Europe and heading into winter with energy issues with Russia, I would expect natural gas to be surging, but I would be clearly dead wrong. I'm glad I don't own any natural gas. Let's see. Those daily candles look like 5-minute candles on the futures after hours. Yeah. The new risk is defensive and equity. Sure it is. Everyone, I think that you're here. You have more put buying. There was some stat last week that had like the highest level of put buying in like 20 years. It was crazy. Merlin, your opinion on XRP in the recent rally? So XRP Ripple, I am still not a fan of. I think that they are too embroiled in this lawsuit with the SEC. It's going to cost them dearly. I don't know what's going to happen when they come out of it. There certainly will have some clarity as to what they can do and how they do it. But there's other there's other cryptocurrencies that have now taken over and started to create their own peer payment networks and may challenge Swift protocol, which is exactly what Ripple was trying to do. Something like Stellar Lumens, right? Stellar Lumens XLM, they're making payment networks. And I just think until this is cleared up, I'm not touching Ripple. Now, I have a bunch of Ripples still, but not adding any more to my portfolio. You really can't buy it in the U.S. anyway because of the SEC lawsuit. But, kind of a surprising rally up there. This was partly due to the expectation that Ripple was going to settle with the SEC. And it actually looked like they had some pretty good arguments against the Securities and Exchange Commission, but haven't seen anything really transpire from that. So that's pretty much it for Ripple. I used to be very bullish on it, and then when I realized that they have a very easily replicated model, I kind of shied away from it and didn't want to add any more. Can you analyze CL current? That's above my pay grade, Trader T. Yeah, I don't really focus on backwardation or contango, that something. If I'm trading futures, I'm just trading for the short-term price action that we get. So that was John Rowland's show. It's one of those ones that every time I go over that topic, I'm always like a little confused, I'll be honest, but it's not something I look at. Sorry, Trader Joe or Trader T. So Australian dollar is also getting very interesting. If I'm not mistaken, let's see. Next week we have Bank of Japan making a rate announcement. There's 3 announcements happening next week. I was going to go over them at the end, but let me just cover those for you right now, just so we can look and see. There's 3 pretty big central bank announcements happening next week. Euro is one of them. Bank of Canada. So you have Bank of Canada coming out. That's expected to be a 50 basis point increase. You have the Euro, which is, again, aggressively raising like we are. They're looking at another 75 basis points. And then finally that Bank of Japan. So Australia... I do so many of these, I forget exactly when they did it. I want to say they did it a couple weeks ago where they had their rate increase and they hiked as well. But if you look at the trend of it, it's still aggressively down. Now, we had talked about this coming into some areas of demand that go way back over here. You could break down this weekly time frame and find areas of demand in this this week of the April of 2020. No real surprise to see that Aussie dollar bounce, especially because the speed at which it sold off. Normally, when you get a move like this, which is just incredibly aggressive, if you look here, you 1, 2, 3, 4, 5, 6, 7, 8, 9. Let's call it a 10-week period. You had 8 of those were down weeks, and some of those were very big, large weeks. So this was really a painful moment for the Aussies. They have been raising their rates aggressively, just like the U.S. has, in an effort, I think, to stabilize the decline in the Aussie dollar. Now, I'm sure there's other things they could be doing, just like the U.S. could be doing. As we go forward, we'll see more and more intervention here. And, we talked about this global currency war. It was interesting a few years ago. Who was it? I think it was Mnuchin said, I always pronounce his name wrong, but Mnuchin said something like, we don't want to engage in a global currency war. It's like, well, do you realize that the U.S. essentially started the global currency war by just extreme manipulation of their rates, and now everybody's doing it, right? So when you look at these charts of the euro, the yen, the pound, the dollar, they're all manipulating their currency as fast as possible to help stabilize the currency as well as foster a positive or bullish stance for their economy going forward. Again, you look at Japan here, this is not good for them at all. Now, certainly you could say that exports should be booming out of Japan because the cost of goods and services there has gotten so cheap. Let's look just right here on this daily time frame. I'll put a big vertical line here when we were at 100. We'll go down to parity, right? So we can say right here. Roughly in March of 2020, we were at, let's call it 100 against the yen, right? Now we're at 150. I mean, that's a 50% increase in the purchasing power of the dollar. You get 50% more. I mean, that is a hell of an opportunity to go travel. And of course, their goods and services should be flying off the shelves, but I really haven't seen anything that supports that assumption, right? My assumption would be that the manufacturers over in Japan would be selling a lot more simply because U.S. can buy a lot more. So if you're buying vehicles that are built in Japan, well, I can buy, instead of buying 1, I could actually buy 1.5 now. That's a huge change. So for every 3 vehicle, or for every 2 I could buy in March of 2020, I can now buy 3 for the same amount of US dollars. I mean, that is a big, big increase and should increase some of the profits for some of these companies going forward, which is maybe why we're seeing 80% of companies beat earnings. All right, let me go to a couple listener questions here. Actually, questions? Yeah, I'll skip the economic data. Here is Schlumberger, which we were having fun with yesterday, but yes, Schlumberger is the appropriate pronunciation. It just, if you read it like Slumburger, it just sounds weird. Schlumberger. Anyway, Schlumberger's earnings, Schlumberger, they beat as well. So only one on this list that did not beat was Regions Financial, but you had Huntington Bankshares beat, American Express beat, HCA Healthcare beat, Verizon beat, Schlumberger beat, and some of them beating fairly handily. You see a nice pop here in Schlumberger, up 10% on the day based off their earnings announcement, and it is actually screaming into overhead supply. I don't believe losing their new prime minister in the first 44 days is going to be good for the... No, not at all. And I read something, I'm not 100% sure on this, but something like because she stayed in office for more than 30 days, she now gets 111,000 pounds per year for the rest of her life. It's like, man, what a gig. Be the prime minister, raise your hand after you pass that threshold and say, I just can't hack it, I got to move on, and you now make 111,000 pounds for the rest of your life for doing nothing. Wow, man. I'm in the wrong business, right? Yeah, certainly when you see that kind of change in political leadership very quickly, that's not a good sign. Now, the British pound, here's your pound, has had a nice big bounce. We were down at some very low levels. I was, biting my nails thinking that we would get to parity on this one, just unbelievable. And now we're back up to almost 113. So it's been a great bounce for the British pound, but I don't think you're out of the woods yet. Let's see. The majority of Japanese vehicles sold in the U.S. are made. Yes, I know that, Tom. I know most vehicles are made in North America. It was just saying if they buy products and services. So what about Sony PlayStations? I actually think that Sony PlayStations are still made in Japan, but if something's made there, I'm a U.S. consumer, I would love to be buying more and more products from Japan because of the strength of my currency. Oh boy, Boris is coming back? I don't know. I try to stay out of politics. Politics are one thing that really irk me. Yep, one term in Congress, same thing. Yep, paid for life. I think you and I are paying for Secret Service protection for every president that's still living. So Carter, Barack Obama, Bill Clinton, Bush, we're paying for secret security detail plus lifetime payment to those guys as well as Donald Trump. So the beauty of politics. Unfortunately, I could never do it. Could never do politics. Let's see. That was the earnings front. Let me go into a couple listener questions so I can get these ones out of the way. KF. This is a pretty good question. He says, Merlin, based on your experience as a trader, does pure supply and demand analysis and finding power zones work for becoming a profitable trader for the long run and most of the times? Or does one have to consider other factors such as fundamentals and news as well? I believe, and this is just my take, I believe that if you're a long-term investor, and you're talking making trades that last 6 months, a year or more, then I think you have to look at fundamentals. You should look down into the financial statements and see how they're doing, where are their strengths, where their weaknesses, and know what is facing that company. But if you're making day trades or trades that last a couple of weeks, maybe even a couple of months, I don't think fundamentals mean squat to you. You want to know when earnings come out because those are the wild events, but if I'm trading for a couple of weeks on a swing trade or a 1 month option play, who cares about fundamentals? So yes, I do believe that a pure supply and demand methodology will give you the foundation to be a profitable trader. Now, I think by itself, supply and demand isn't the answer. It is one component of a solution. My personal perspective, and this is just my take, not representing Online Trading Academy or any other education school out there, is the cornerstone of what drives prices in anything in your life and in anything in my life is supply and demand. You could say, I have the most desirable and rarest coin on the planet. Let's say I've got a gold coin from the 1850s. It's the only one in existence of its kind. In my mind, I'm thinking that thing's worth millions, right? What do you guys think? If I have the only gold coin from, let's call it, I'm going to write down we'll make it even older. Let's go to, it's a 1576 gold coin, right? And it's one of a kind. It was done by some government that's now defunct and out of business. But I've got this 1576 gold coin, 1 ounce coin. It's the only one of its kind. The melt value right now, meaning if I were to take that coin and melt it down and just get the price of gold to be $1,656. But given its rarity, the fact it's one of a kind and it's the only one in the world, what do you guys think that should go for? Think it should go for a lot of money, like way more than melt value? Or should it just go for what the melt value is? Meaning if I take it, melt it down, what's the price of an ounce of gold? This is what rare coins are very popular for, and why I actually collect some rare coins. I collect some gold coins. I have a few of those. And it's because of scarcity that drives the price. Well, that's one component. The scarcity drives the price. The other piece that drives that price is the fact that somebody wants to buy it. So if I have this gold coin that is one of a kind, it's gold, it's not worth anything more than the melt value if nobody wants to buy it, right? I can still melt it down and sell the gold and people will buy gold, but that coin, it may have no value whatsoever other than its melt value. Whereas I could have that one gold coin and every collector in the world wants it. Now all of a sudden that coin could be worth tens of millions of dollars. That's the nature of supply and demand. So it's supply and demand, but if nobody wants your product or what you have to offer, it's worthless, right? So supply and demand is great. I think that's important. I am a believer that trends are absolutely critical as well. That's where the big moves happen. So if you're playing supply and demand, I don't want to do graphics here today. I was going to draw it on the screen, but I'll just move away from that one. But let's say I've got a demand zone, right? And price comes down into it. Based off the content that we teach, you're looking for that next supply zone to sell out at, right? To calculate out your trade, your reward to risk ratio, etc. But what happens if that thing hits that supply level and breaks through and just keeps on going? To me, this is why it's so important to understand trends, because I might reevaluate price at that supply level, may hold on to it and readjust my stop losses to lock in profits, but give that security room to run. So supply and demand in conjunction with trends, to me, is what really makes a successful trader over time. All right, let's see. Hello, Sheila. Let's see. Why do I want an old coin, or I want you to sell it to another excited buyer? Well, some people love gold coins. It's funny. I did an interview on Power Trading Radio years ago with a company called Rare Coin Wholesalers. And the guy came into the studio and he had a pocket full of coins, and he was bringing out one. He's like, here's this one. It's worth $20,000. And like, wow, that's a little coin worth 20 grand. Cool. Brought another one. This one's worth like $50,000. And then he brought out a buffalo head nickel. A nickel. It's got a face value of 5 cents. We started talking about it and going through, and he says this one's very rare, et cetera, et cetera, et cetera. And, there's not that many of these in circulation. It's in very good condition. And he says, Merlin, how much do you think this thing's worth? I'm like, well, I'm guessing it's higher than 100,000 because you're kind of going in progress, And so last one was 100 grand. I'm going to guess 150 grand. He says it's like $550,000 for this thing. And I just stopped and stared at this little tiny coin in a plastic package thinking, where's the hot tub? Where's the 3 bedrooms or my bathroom in that? I mean, I'd rather buy a house than a gold coin like that. But it's the rarity for collectors to hold these things is incredible. I mean, if you want a good example of that, just watch Pawn Stars, right? There's some crap you look at these people are buying going, I would never buy. You're spending how much for this thing? It's a broken baseball bat from the 1940s. Who cares? Oh, it went for $50,000. If there's a buyer for it, great. If not, it's not going to move. So that's why supply and demand is so important. Let's see. Numismatist gold coins have been awesome despite the metal spot price. Yep. Scarcity and rare ones. Yep. All right. Excellent. So, KF, great question. To me, supply and demand, but you have to use that in conjunction with the trend. Know where the trend is going, know where it's come from, and kind of map out based off of historical, statistical evidence through pattern recognition where it may go in the future. Now, that said, you guys have seen it many times. There's quite often I'll be wrong on something, and that's fine. That's why we put stop losses into place. But there's other times where I'm right on something, and I'll let those trades ride, and those turn into just great winners. And ultimately, that's what you want to have. You want to have something that you planned out to be let's say a 3-to-1 reward to risk ratio. I risked $1 and I was trying to make $3. Well, all of a sudden it gets to 275 and you're about to pull the trigger because that's what your plan was. But you go, man, this trend is strong. Let me reevaluate it. And maybe I'll put a little trailing stop loss on this thing and let it run. Next thing you know, it becomes a 10, 12, 50, 100-to-1 reward to risk ratio. Awesome. And those are the ones that really set your trading up. So supply and demand, as well as looking at trend, to me is important. I really don't like to look at fundamentals because I believe that they can cook the books. I believe that If you're a clever accountant, you can make me believe that you're the greatest company in the world and your company's actually losing money. Just ask Enron, just ask WorldCom, hell, just ask Nikola and many other companies out there. All right. Every now and again I get these ones. Dean says, what about buying Snapchat big discount? Look, part of this is, I guess part of being successful in trading is not getting wrapped up in the emotion. And if you find yourself saying this thing can't go any lower, it probably will. Snapchat, in my opinion, is one of those that, you know, I was short Snapchat. Oops, how about SNAP? You guys might remember this. I initially was short Snapchat. I'll show you in the daily. We actually had Don Fron on the show, and I was short Snapchat as well as Facebook. And I shorted Snapchat here, I think it was a couple days into this run, like right around $40. Took a little bit of a loss. And then as it started to make some new lows in here, I ended up shorting it again and ended up making a much, much better gain. Actually had a fantastic gain on this one. But you look at this price chart on Snapchat right now. You're at $7.76. Your all-time high was roughly $85. I guess you got to ask yourself, is Snapchat going to become popular again? My guess is no. I'm not a millennial. I'm not a whatever the newest generation of consumer is with regards to digital and social media products. This one had its day. It was popular, and now I think it's just fizzling away. I mean, you look right now, Facebook's trying to reinvent itself. Meta trying to reinvent itself. You look at what's the other one? Instagram, right? Instagram is losing a little bit of popularity. I personally don't think buying Snapchat at $7.76 is worthwhile. Just because something craters doesn't mean that you should be jumping on it. You know, a good example of that is Teladoc, TDOC, right? There's a lot of companies like this that did well during the COVID hibernation we were all in. But look at their peak back here in February of 2021. It was over $300, and now you're at 24. And there's a lot of people that are gonna go, "Oh man, Teladoc at $24, dude, I better load up on that." Well, look, this thing could go to zero. I don't personally know anybody who uses Teladoc. You can see these lows all the way back to 2016, right around $10. I mean, this thing still looks like it has a trend. It's powering it to the south side. So, Dean, I'm generally very skeptical about catching the falling knife unless it's at a major demand zone, and you could make the argument that right now it is at a pretty significant demand zone, but I just don't believe that. Oh, that's Teladoc. Sorry, let me go to Snapchat. When you go to Snapchat, I don't think, I wouldn't buy it. I mean, if you gave me money, I wouldn't buy it. I just really don't think I don't think that this has got legs. I think it's going to just fizzle away. Probably get bought by somebody at pennies on the dollar and just slowly disappear. But yeah, nope, not for me, Dean. Even if it's a big discount. And remember, there's a reason it's at $7. If institutions felt that this was a great social media platform, we're going to do really well, it'd be moving up. But it's not. Steve Hall, don't make no sense to me. Ask a computer why. What? Snapchat has dropped 90%. What is to prevent it from dropping 99%? I see no value whatsoever. Well, I think there is value. There is value in its community, right? So they do have people who use it, but last time I checked on it, the numbers were literally just dropping and dropping and dropping. Like people were just moving on from it, right? It was cool at the very beginning. It was kind of, interesting to send Snapchats that deleted themselves after a few seconds. Cool. There was some other really cool functionality where you could open up Snapchat and then it would identify where you're at and then show you all the cool things happening around you. I think that is really cool. I actually like that because I'm a fairly social person. Like imagine I'm traveling through Berlin and I open up my Snapchat and it says, hey, there's this art exhibit over here. People are taking all these really cool pictures of some museum. It might give me ideas, but I just don't see that turning it around. I think that idea could be stolen from many other places. So Dean, not for me. If you want to buy a Snapchat, caveat emptor, buyer beware. It's down almost 90% for a reason. Let's see. Snapchat's a joke. More bad earnings too. Yep, and we'll probably keep having bad earnings. Like to stay away from hyped up, cheap meme stocks anyway, as you should. Now, when I teach the cryptocurrency class, I have a session, which I'm going to probably redo here in a couple weeks, dealing with building a portfolio. Now, if you have a long-term investment portfolio, and I usually focus this on crypto, but let's just assume it's equity markets as well. If you are building a portfolio, you want to have staples in your portfolio, right? You want to have the big names that are stable and going to slowly grow in your portfolio as opposed to taking a flyer on some crazy meme stocks. That said, when I look at crypto, for example, I'm going 30% in companies that are, let's say, store of value. I'm going to look at 30% in smart contract platforms, 30% in targeted projects that are looking to accomplish a specific goal. Things like I mentioned LivePeer before, where they do streaming. Okay, great, that's a targeted project. That goes in that slice of the portfolio. But I also have a 10% left over that I put in my gamble pile. And that gamble slot is basically, this is money I'm assuming I'm going to lose. This 10% of this portfolio, it's a loss. So let me see if there's stuff that I think is interesting, but probably is going to die. And that would be things like Snapchat, right? Snapchat would be in that category. Do I want to buy some of that I don't think that their model is going to survive. But hey, if they get bought by somebody, who knows? Maybe Elon Musk comes out and says, hey, I'll pay $16 a share for it. Great. Same thing with, what's another good example? I don't know if I would say MJ is a gamble. I think long term, you'll probably be fine holding MJ, but that's under $5 right now. What about, boy, I'm trying to think of something I would view as a total speculation gamble play, but off the top of my head, I'm drawing blanks. You guys probably have more than I do. Let's see, big Snap is driven by ad revenue. Yep. Exactly, which is part of the reason I think it's just a dying duck. All right. Good one, Jimmy. I like that. Figures don't lie, but liars figure. Yes, absolutely. All right, let me see. I think I got a couple questions here. This is more just of a statement, and, a lot of people, AMC. Okay, yeah, we could do those meme stocks. Good one, Big Ed. Thank you. AMC, honestly, like AMC is one that I would not actually have too big of a problem buying some at a certain point and putting it in my portfolio. Why? Movie theaters aren't going to go away. There's still going to be movie theaters. I think we're getting more and more okay with going out and going to movie theaters, although you're seeing premieres done on streaming media now. But you look historically, let me go out here to a weekly on it. Going all the way back into 2014, this thing was up around $20. So to me, these are the good days. But then for whatever reason, from 2016 to 2020, this is before COVID, this thing was just dead in the water. So, if AMC got down into the $4 range, if I'm a long-term holder, sure. But that would go in the gamble slice of my portfolio. Now this one, GME, this is pure speculation. How this thing is holding at $25 is mind-boggling to me. I don't get it. There's no reason for this thing to be up at that high of a price. It's absolutely insane, and that's a logarithmic. Here's the standard chart of it. But, to me, I would never put this in my portfolio simply because I think it's dead. I think GameStop's going to go away just like Blockbuster did. There'll be one location left. I think there's one Blockbuster left in like Portland or something. You can rent it out as a B&B. That's kind of a weird one. What's my thoughts on Block? SQ. So one of the reasons I like Square, I hate that I have to call it Block now. It's like me having to call Google Alphabet. To me, it's still Google. If I look at Block here, this is the weekly time frame of it. You have this huge pop-up, huge move back down. I actually like the Square application. I think it's opened the door to a lot of businesses to not have to use traditional payment methods, and they're using their network. I like it. I don't know enough about their business model to say, hey, I would add some to my portfolio. I mean, it's still traded at $56. It looks to me like this big line in the sand here is right around $35, where it's bounced off during that COVID low. But it has a good model. It has a device that people use. It has something that's not going to go away. See, social media and posting dick pics on your Snapchat so they go away, that's what that was used for. Who really needs that? With Square, if I'm a business, I need to have a payment network and where people can swipe their credit cards, and that's where Square and Block has done rather well. They've got a bunch of other things as well. I would have to dig in this one, Judy. I would have to look a little bit into the fundamentals, but the company idea and the concept, I like. I also like Jack Dorsey. I like his. I think he and I have a similar interest in changing things that can be done to change the world and moving away from centralization. He's a little radical in some areas, but I like the fact that Jack Dorsey is there. But I would err myself on the side of positive side with regards to Block. I do like the company, but I have to look at some of the fundamentals if I'm going to do a long-term investment here. If I'm looking at trading it, let's just look at from a trade perspective. I mean, this looks just like Bitcoin, doesn't it? It looks dead. I would leave it alone. Merlin, what do you think about ascending triangles for trading? All right, I'll tell you guys a little joke. Not really a joke. It's not a joke. It's actually funny to me. I found it amusing. So I used to work with a guy. He was Egyptian, and he had a really, really heavy Egyptian accent. And I was training him to be an instructor for Online Trading Academy. Back in the day, I spent a lot of time. If somebody said, hey, here's my trading records, and I'm a trader, they would come in, and we couldn't let them teach right away, right? They'd have to go through training and understand how we teach the material, because everybody brings their own baggage to the table. And the last thing you want as a student is to have all these crazy instructors all teaching things completely different. So I did a lot of training for instructors. And this guy came in, I won't mention his name, but just a great old guy from Egypt. And he's like, Merlin, I would really like to present this topic. Okay, what is it? And it was a bullish flag pattern. Bullish and bearish flags were his thing. And how many of you know what a bullish bearish flag is? If you don't, if you say no, maybe I'll just draw it for you, because I'm sure some of you don't know what that is. I should probably just do a show on it anyway, just for fun. But let me draw in, get a blank screen here. 1 second. Just so we can have a visual reference for you. There it is. Yeah, most of you probably know, because I've talked about bullish and bearish flags in this program before, but some of you might be rather new. So he would talk about, price moving up. Come on. Give me my cursor. There it is. Here, you have this, and then you have a big surge in price, and then price just traverses sideways. But what he would do is he would go, when I see this big impulse in price. I know I sound like Count Dracula, but I can't do my Egyptian accent right now, so I apologize to anybody I might be offending. It's all right. You have this big impulse move up, and you're like, when do you have this big? And he'd been a floor trader for many, many years, institutional trader. So, I love hearing from those types of guys as well, because I'm a retail trader. I started not on a trading floor. I started on a retail trading floor. So he's like, you have this big impulse move to the upside, and then price kind of calms and stalls. When I see this is called a bullish flag. And for me, I love this. I have to come back to me. He goes, for me, this is the gift of God. And I was like, wow. Everybody has their pattern that they think is what the holy grail for them. For him, it was, thanks, Steve. It was the bullish flag pattern. It was his gift of God. For me, ascending triangles, I love them. I would say my gift of, if I had to label it this gift of God, I'm not a religious person, so I apologize if I'm offending people right now, but the gift of God for me in a candle-wise is just simple candlesticks, shooting stars, hammer formations. That's it. That's what I want. But as far as ascending triangles go, I love them. I'm a huge fan of ascending triangles. And for those who don't know, an ascending triangle is where price would look like this. It's moving up, hits a ceiling, drifts back down, comes back, does a double top. And you can have multiple, attempts at this top level here. But what you're really looking at is the increasing lows. Every time it comes back down, it doesn't go as low. So you have buying pressure is pushing this thing up. Ultimately, statistically, you could get a big break here, and a lot of times it's the distance from there to there. So I could make a target like somewhere about here. So I love ascending triangles. I love descending triangles as well. So there you go, Eric. How about Shopify? Similar move to Square. Yeah, I think that when you look at with Shopify, a lot of people went and started up their own businesses, right? There was a big move to do things online, especially when COVID hit. And unfortunately, I think Shopify had that big boom bust type of cycle because of that, right? They went from $30 to over 175. I mean, that's monstrous. At some point, you got to think Shopify is still there, right? I don't think Shopify is going to go away. It's still offering a service that anybody who wants to start their own online e-commerce site can do using Shopify. I mean, I may, if I were to decide to do stuff, sell things for TraderMerlin, I might do Shopify as well. So I think there's certainly value in there. But if you go back to my overwhelming bias in the markets, it's to go with the trend, right? Well, there's nothing here that says trend is going to the upside. It really is just saying it's slowly drifting down. So at some point, I'd be okay buying Shopify, Chase. I actually really would. And maybe that means selling puts on Shopify at like I don't know, 22.50, go down to these lows here, call it 23. I don't know what the options price are. It might not be that liquid, but selling some puts, and if you get exercise, all right, you're in it for the long haul. But remember, this trend is the most powerful piece in this one. It was aggressively down when we peaked back in November of last year. It's certainly flattened out here, and it looks like one of those pieces that at some point it's going to stabilize and start to move back to the upside. So there you go. That's my take on Shopify. It's like all of crypto and the bull market. Yep, up. Everyone up. Yep, chasing the flags. Well, now all of a sudden everything, it's the opposite, right? Everything was just crashing down. But the good news for any crypto fan or Shopify here is this sideways action. It's no longer, hemorrhaging like it was back in November and December of last year. It's stabilized a little bit. Now, it's kind of disappointing that it's had this trend from August, which is lower highs, lower lows. Maybe what you do if you are interested in Shopify is you just put yourself some lines where you say, all right, right now it's at 29.75. I need it to make some highs. It's got to start making new highs, meaning that the buyers have now pushed it above where the sellers were stopping it. If that happens, then okay, maybe add some to your portfolio. But right now, it still looks like it's just drifting down, so not that great. Why is technical analysis against circles? Circles? I'm not against circles. I just think boxes are easier. Boxes are... I can't really outline something with a circle. So, for example, we call me out on my patterns. Let's see. Can I even do a circle in this one? I'm sure I can. I don't know. One sec. There it is. Here's your circle. You want me to do a circle? Okay, if I did a circle from there to there, well, how does this help me? It doesn't help me at all. Yeah, you can see, as you mentioned, the split here. So when you have these S's, the one thing that's really nice about TradingView for anybody who might be using that platform, when you look down here at the bottom, you can see there's different earnings announcements. So the E's are earnings, and then the S is a split. So they did a 10-for-1 split back in June just because price had cratered so much. And it's not... sorry, 10-for-1 split on this one, not a reverse split. That was a reverse split, wasn't it? Yeah, it was a reverse split. Anyway, you could spot the splits as well as dividends. If a company was paying dividends like Microsoft, they'll give you a little D every now and again. So I think that's a really cool feature in TradingView. Some platforms have it, some do not. Okay, let me see. Do I have any other last minute questions here? Oh yeah, and this was one I was going to get to, which was it's from Les, which is it's a good point. I actually really like it. It said I had mentioned to you about a cash secured put on AT&T back in late August. You looked at the chart and said that only because it was demand, it might be okay. The put was at $18, then it dropped and kept on dropping. Paper loss at one time, not including premiums, was around $354. I decided that I didn't want to get assigned today, so I closed the trade. I realized I could have been assigned stock at $18 anytime that it was in the money. With the premiums I received, I closed the losing trade for a $6 profit. Let's hear it for options. I can be wrong and still make money. Absolutely, Les. That's one of my favorite things about him. Let's look at AT&T. You held it a little too long, in my opinion. I probably would have dumped. And here's the chart, right? As soon as we broke that 18, I would have probably gotten out. This thing really cratered from there too. I'm sure at one point you're feeling pretty damn nervous about this bad boy. Lucky for you, and this is very lucky, you had this huge run and you carried it through earnings. So Les, you took some big risks here. You really did. But the cool part about it is you sold the $18 strike, got out of somewhere around 17, and still made money. I love that about options, all right? Today, I had a bunch of puts that I had sold on the triple Qs. And I sold the 270s, and you guys can see today it closed at 275. But over the past couple of days, let's zoom in here. Oops, get rid of that line. Here's the 270 horizontal line. You can see it's been back and forth above and below that line. So there was a risk I was going to be exercised when we were down around 255 on my QQQs. So today was a great one. I collected a lot of premium on these puts when I initially sold them, and today they finished in the money. So it was a great day for me all around. I get to keep all the premium. Markets move up, and hopefully I will be able to make some nice options trades, collect a lot of premium on Monday. I mean, the worst trade I had over the past 30 days was Tesla. Other than that, everything has been really good for me. Tesla, as you guys remember, I had sold when we were up here at, 308, 310, somewhere in here, I sold the 270 put. and that thing just cratered. Now, I kept it. Well, actually, when we broke below 270, I sold out of a sum of my position, but I kept one just as a, I don't know, something to see what would happen, and I was actually okay owning 100 shares of Tesla. I mean, look how low this thing went. It fell over 70 points below the strike price. I mean, that is a pretty incredible move. I was actually expecting them to have a bigger move up, but got out, took a nice loss on that one, and fortunately for me, all of the other options and other trades I've made for the last 30 days have more than offset just that one, or those losing positions that I took in Tesla. So it's the beauty of options. You don't have to be right. You just can't be very, very wrong. Steve Moses, that's one of his favorite lines. He says, with options, I don't have to be right. I just can't be really, really, really wrong. And in that case, on this Tesla, I was really wrong. And same thing on your AT&T. You were pretty wrong on that one. I was initially thinking of buying AT&T at $18. Probably better if you sold the put. Collect that premium and buy it just a little bit lower, right? Another reason I love options. All right, what else do I got here? No, a reverse split would be 1 share for your 10. I thought that's what this... I'm not 100% see. Yeah, you're right. It'd be 1/10. Because sometimes I look at these. Here's Tesla's last split where they did a 3-for-1. So you get 3 shares for every one. For some reason, my mind thinks, oh, for every 3 shares I have, I now get 1. But no, this is the way it was. So yeah, Shopify did a 10-to-1 split. For every share you got 10. That's nice. That's always a wonderful thing to wake up to in your account. Let's see. Tom says COVID sweethearts. Let's not forget just the flat out IWM, right, Tom? That was one of the best ones out there. All right, that's going to do it. Let me go into what's happening for Monday's trading session, and we can wrap things up here as I realize I'm quickly approaching an hour. My ice cube is almost melted, and I haven't finished my 15-year-old bourbon. Here's your economic calendar for the 24th of October. Nope, this is not. This is wrong. So I screwed up. That is not the calendar. That's really weird. I'll show you the economic calendar for October 24th. This is the economic calendar for October 24th. Lots of manufacturing numbers coming out. You can see Euro, British Pound, and US has flash services and manufacturing PMI numbers coming out. Early in the morning, you can see the hours over there. You also have Jenny Yellen speaking at 8 a.m. Now, that'll be an interesting announcement, and I'll see what she has to say. As far as earnings go, there are some pretty decent names reporting next week. Certainly Thursday is your monster day. That is the king of days. Monday, if I remember correctly, you've got Logitech, Discover Financial Services, and I think HSBC is slated to report earnings. So Monday is a little bit quieter with regards to earnings, but Wednesday and Thursday, you get some motherload big names. Apple and Amazon are reporting on Thursday, so that will be the exciting part for the week. And when we start the shows next week, there's going to be a ton of dramatic action. There is so many big economic announcements, international pieces, rate announcements coming out next week. I thought this week was a pretty active week, but boy, I think next week's going to be even better and even more volatile, so that should be fun. All right, that's going to do it for me, guys. If you enjoyed today's show, hit that little like button. I know some of you enjoyed the show. If you don't, then you can email me at TraderMerlin@gmail.com and tell me what you did not like, and maybe I can fix those things or incorporate your thoughts into it. If you have a topic that you want covered for next week, best thing to do is put that down below a YouTube video. Doesn't matter which one. Pick any video out there of mine because I can see all the comments that you guys post, and let me know if there's something you want me to cover, person you want me to have on, discussion topic, whatever you like. Let me know, and I'd be happy to bring that to cover those topics for you. So hope you all have a fantastic remainder of your day. Do something fun. Spread some love this weekend, and I will see you all on Monday. Take care, everybody.